Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, May 4th, 2022. Another wild, crazy, but very wild day. As I left it last night on the update about what possible expectations could be on the different levels that this report or this interest rates could have gone today. I had discussed that if it was going to be a 25 basis points hike, that the market would sell off. And I explained why. I said, but 50 to 75 basis points, the market is likely going to rally in relief, in short covering, whatever they were doing. But the market would rally like there was no tomorrow. And that's what happened. Now, was that necessarily the reaction that I think the market would be expecting on a 50 basis point rate hike with the promise of more to come? No. And I think that it delivered an important message, but again, not that this situation is changing. It may have given a glimmer of hope. However people want to interpret it, it was algorithms running wild. It was short covering all over the place. As what was expected to what happened really became turning into an avalanche to the upside. Now, does that avalanche really change the long-term picture? Does it really change anything that's actually going on with interest rates? No, it's the second. It's the second of 7 that are scheduled. It's come in bigger because they thought they all would be 25 basis points. So it's come in higher. Not as high as it could have been, but higher. So we've got some relief. We've got whatever the traders wish to do. But that situation has not changed. We don't have any numbers that are showing us that inflation has been stopped in its track and is now reversing. We don't have any evidence that that inflation has been contained, that food prices and grocery prices and gas prices and new car and used car prices are going to start declining. We've got no indication of that. Now, granted, the markets would say, well, we're really 6 months out in front. It's like, oh, yeah, right. Yeah, we're all so good that we're 6 months out in front. And now we're just going to be like, thank you, Fed. You've got this one by the you know what, and this is all going to come through. Yet to be seen. So I don't accept any of the verbiage that comes out when we get a 900, almost 1,000 point rally in the Dow, a 400 point rally in the NASDAQ against an interest rate increase. But this is the second time this has happened. We got it here back in March. Extremely oversold. Boom. And guess what it was? A wave 2. So back to the count. It's changed. And it's not a dramatic change. It's not breaking any rules change. It's not indicating a trend change in any way, shape, or form. So again, I'm not opposed to making those changes, but I need more evidence besides the market deciding to put in a 900 point rally in one day. So we're going to read and hear a lot about this, because the whole thing that our Fed and a lot of players, we don't want to upset the market. We don't want to upset investors. We don't want to get that all around. We know what happens when we set up. We can't do that. We can't do that. I was like, come on, folks. The Fed does what it does. It's behind. It remains behind. So therefore, we can continue to expect interest rate rises. We have not seen any evidence yet that what they've done thus far is actually going to work. In fact, quarter point did nothing. We continued to get. So how far it's got to flow? Remember, comes down from interest rates and then it starts to flow down. It doesn't happen immediately, and it certainly doesn't change the picture in 2 hours or 30 minutes after it came out. So it's trading. It's fun. It was extremely profitable. So I want to just say that you'll hear me saying, I'm going to tell you again right now, when the trading goes through and it breaks my wave count, when I give it that I say what the small wave 2 that I was intending on counting there I gave what it could not do. I said, it goes above this level, it negates this particular count. It negates this level of degree that I've gone to. And that's what happened. So take a step back and I realize, okay, my choice is if I'm not changing my larger picture, which I am not, because it's still in force because of what we have corrected or what we have completed and how long it took for us to get there. 6 months of decline, of a battle of a decline, do not correct 90 years, 13 years, et cetera, does not correct that amount of time. And so there is still more to come. Now, where are we? I moved down the minor wave one. So let me just open that up so we can see it just quickly. So what happened is all the minutes got moved up and it became a minor. Now, initially, this was getting put in as minor one, minor two, minute one, minute two, subminute one, subminute two, boom. It broke. It broke above what was being labeled as minute wave two. It broke above it and it's closing above it. So that opens the door. It changes the picture. It doesn't change that the expectations of this larger decline that's going through its motions. It does not change the outcome initially of a drop to 34.80, I think I was calling it. But if I go back out and now I take a look at this and now what I'm expecting, 37.05 should be to be broken. This is a weekly chart, should not be a problem. I know it's going to appear like it when we're touching, getting closer to 4,300. Oh yeah, we're going to go up. It's like, okay, yes, we are. And yes, it's very tradable. But nobody was wrong. Nobody that was calling for more downside was wrong. It just turned and went against that, but doesn't mean that it's not going to happen. So if you were long coming into it, bravo, you've had a good day. If you were short, hopefully you reversed. If not, you're making adjustments to your positions. And again, if this is indeed, I'm pulling this lower, and this is minor one out of 5 minor waves of minor degree that need to come down. This is minor two. Next now is back to, we're still constantly looking for that corner being turned and that third wave that's going to kick in and make this look like kids play. Seriously, that's what I continue to look for. And when I don't get it, doesn't mean it's not going to happen. It just means I need to have more patience and count what's actually taking place in front of me. And only the market can do that for me. Only the market can tell me how we're moving forward. So again, 2174. I didn't think that that was going to be this case in the A wave. Now it looks much more like that's exactly where it's going to be. I was thinking that the S&P might end up here, eventually down to here, but now it looks like wave A on the primary degree will come in down here because we have so much more ground to cover. And it keeps giving me clues of its severity, of its size, because the internals keep getting extended out. So, or extended down in this case. So again, the wave count isn't wrong. The larger picture, I don't believe is wrong. That's the reality. We just need to walk outside. We can see the larger picture in action. We can see inflation. We can see it, we're paying it. So that has not changed. The political situation in the Ukraine against Russia has not changed. In fact, Russia's getting a little bit more verbal about what they're threatened with. The situation about natural gas and things going into Western Europe has not changed. The economy has not changed. These things don't turn on a dime. I know the market can, but that big doesn't. It's a bigger boat and it takes a lot longer. So what can we expect? Let me go down to that hourly chart. If indeed this whole shebang was minor wave one, and we're in a minor wave two, what we got going possibly is an A, a B, and now we're in that C wave up. What's the expectations? Well, first thing I want to point out, see that? I've talked about moving averages, and I've talked about when these big anchors get broken, you do not want to get in the way. Now, yes, you might sit and wonder, what do I want to consider a break? This was at 42.29, 42.30. I would say when it was starting to hit up here at 42.48, 49, and it pulled back and it came back and broke it, yeah, get on board. And then you got another S&P, you got another 35, 40 points. You could have gotten in earlier because you got the hints that it was going to happen and you made even more money. You don't, here, I'm going to give you all the little stuff that people say. Don't fight the tape. Don't fight the market. They're telling you the truth. They're just trying to make up a cute saying. Point being, if you were short, that was okay. It's not the wrong position to have. But when it turns, be a trader. Don't go, oh my God, I'm losing all my money. Because then you're just standing like a deer in the headlights. You need to jump into action. You need to do something. That would be change your position. Manage your position. If you're short the future, get out, go long. Being able to change. This is all part of trading. And exactly, here's the bottom line. You hear me talk about this. Everyone has to have their own rules. What are the rules that guide them into their trading? Do they know why they're getting into the trade? Do they know what they expect from the trade? Do they know where they're going to get out in the trade? And lastly, where are you going to exit the trade if the trade becomes invalidated? That's an important factor. You can't let losers kick you in the butt like this one would have done today. And maybe it did. That you just don't let it happen. You react. And often if you react quick enough, you reverse it and you make money. I mean, I was expecting shorts, but I wasn't sitting short. I remember I told you in the update, I said, I will be flat when that number comes out, and I was. So, but I had a great trading day today, and I'm not saying that to be arrogant. I'm not saying that to be, just a jerk. It was a great trading day. There were so many opportunities, and it was one of those days where it went one direction after that 2 o'clock announcement. Little fumbling around, but once they kicked into gear, boom, get out of the way. They were going. And you didn't short it. You just played along. Don't fight the market. What can we expect for tomorrow? Well, I think we still have more upside. I think that, well, let me just drop this down again. Take a look at the 30-minute. It's consolidating. Guess what? The 30-minute 4 is holding the market up because now nobody's going to do anything until some other bigger force comes in and decides direction. So trust me, it's not just us. It's not just day traders. It's not just smaller retail traders. There's some bigger guys who are going like, okay, who's making the call here? What are we doing? We'll all make adjustments, but somebody tell us if we're going up or going down. Not been decided yet. So it's holding there. I'm looking very much like it's a small 4. We can come down to 42.76. We can come down just below 76 down to 73. That's the 8. If it drops down to 42.40, man, now that's a little too big for the fourth wave. So I'm not expecting a lot if it's going to continue higher. As a wave 2, the Fibonacci retracements that are most common for it are the 50% and the 618%. Those are at 43, 44, and 44.12. Now, again, here we are. We're sitting and we have potential, no doubt. We can go knock on 4,600. We can go knock on 4,500. But here's our next level, and it's a minor wave 2. So it can go pretty far. It can go very far. I do not expect it, but stranger things. This wave 2 went much further than I thought. Can this wave 2 go back up and get to 46? It can go up and maybe test it. I'm not expecting that. It can go up 45, yes, that much I have to allow. So here we are dealing with those numbers again. Here we are dealing with 42. Now you're going to scream from the rooftop. See, it told you, 4,100 held. Okay, it did. What did you do about it? That was a great call. I don't think that it's that strong a support. Obviously it did, and it produces the wave count that we have. And that's great. Let's trade. So again, when this market breaks and holding it and holding it and holding it, where we do between 4,000 and 43, 44, 4,500, when this spring, which is winding tighter and tighter and tighter, let's go, it truly will be. I just get out of the way. I'm not talking about a stair step down. I'm talking about a third wave that now I'd be expecting it again, -2, we go drop into a -3. It's now going to be more crash-like than my mind, because it's been delayed, put off. Energy, going to be just building up, that when the dam breaks, it's going to be bigger news. Now, granted, the buy side was great, but we've had these strong down days before as well. And I'm talking about one that now just doesn't stop. I'm talking about, instead of Dow being up 900, we get a Dow down 1,800 day. We get a Dow down 2,000 day. And they'll be filled with all kinds of, oh my God, what's happening? The world's falling apart. And it might be. I don't know. Okay, so for tomorrow, allow for a little bit additional downside. I'm not looking for much, because I think that now the underlying fear provides the underlying strength. If the market starts to come off, again, I'm up on the daily. You just got the 4 and the 8. But if I break it down, and I'm going to be on that day on the hourly chart where it did break it, it comes back down. If it breaks that 50, the 200 on the way down and keeps going. So if it breaks below 42.29, we're starting to get in trouble. I would think that if it does it from here, then it breaks that, breaks the 20, and then breaks the 50, and we're just gone. Then that did complete it. That's a wave 2, and we're down. Now, I know I keep talking about that, and I know I keep saying the wave 2, if it breaks over, this is it, and then we're done. And then we're not, because it decides to extend itself a little bit lower, plant a new low, call it a wave 1, and then rally. It's the market. It's what it's doing. It's just happening. So we trade what's in front of us. We trade accordingly. We trade using the moving averages. When they start to break, you just make that change with them. They're giving you the clues. When it broke above that 200, came back down and gave it a test, it was the biggest, it was the next biggest buy. It means the break went up, it came back down, it held, and it kept going. And you can see slightly hooking up, 20 pointing higher, 50 pointing higher, 8 pointing higher, 4 screaming on the hourly. It's getting an alignment to go up. Not quite there on the shorter term, 30-minute. It's there. There's the 200, there's the 50, 20, 8, 10, 4, all in alignment. So yeah, I'm expecting more. The moving averages are telling me. The market will tell us again if it's not going to happen, because it'll start breaking below those moving averages. Here, it'll start breaking below them. That's the pressure from the sellers. We will know. Those will be the signs. I'm not necessarily thinking that's going to happen tomorrow. I think we still have more upside, and it needs to get itself up into this zone, the 50% to 618% zone, to complete the wave 2. That's what I'm looking for. That's what I think. Okay, I'm going to end it there. Again, trade smart, be open, be more fluid. If you got stuck today, I'm not really hearing from people that did. So they want to hear what the counts are, but they're people seem to be doing okay, and that keeps me happy for right now. In any case, pay attention, use the moving averages, use the Elliott, use the fibs. Next update will be on Thursday, the 5th of May.